Hey everyone, welcome back to AWM Insights. It's your Power 3, 2 CPWAs and a CFA. We are Erik, Brandon, and Justin, and it's great to have the band back together. Brandon, congratulations on the birth of the new baby on Monday. Glad to see that your eyes are open.
Yeah, thanks, Erik. Yeah, it was a good few days, and then last night definitely shook us up a bit. So forgive my 1 hour of sleep comments. I know Justin's suffering through with me as well.
Well, it has not been a boring week in the markets as usual. And so things continue, I think, to catch us off guard, right? We are recording this on Friday at about 12:30 p.m. Pacific, and markets are set to end the week positive again, even in the midst of we are having record COVID cases across the country. And, would just love to hear your guys' thoughts that even in the midst of some of this uncertainty and potential lawsuits around the election, markets are still headed higher.
Yeah, I think the biggest point to underscore with this one is markets are super forward looking. Earlier this week, or was it even over the weekend, there was a news item on a potential vaccine, and markets just skyrocketed on Monday. And I think that optimism is still really, really driving markets through the end of the week here. That isn't to say that part of the caution we've seen over the last few days hasn't been caused by the COVID spiking throughout the United States and Europe for that matter. But markets are really, really looking out 6, 9, probably even 12 months and beyond that in some cases. And that's a good thing, right? That's how investors should be operating. We don't invest for the short term.
Yeah, I think that's a great point, Justin. I think the other thing is, we do know markets typically don't like uncertainty. And on the surface, it kind of looks like a lot of things are uncertain. We've got, a president-elect, but a incumbent president that won't acknowledge it. We've got all these different issues going on, skyrocketing COVID. But, when you really look at, we talked about this last week, markets are forward looking and they do take information and they adjust to that information. And that's the whole thought, right? Is that markets will take all available information and price that in. And what we're seeing is that, right now the information certainly points to a split government. And so, I'm still getting all these calls, what's Biden going to do? I'm going to be paying 75% taxes. The economy is going to fall apart. Markets are going to fall apart. But, I think what the market's telling us is that with a split government, we're probably not going to see a lot of tax policies that maybe Biden had talked about previously get enacted. And then I think there's just a lot of misinformation out there in the public media. But I'd love to hear your guys' kind of thoughts. Are you seeing the same thing? Because that's what it's looking like to me.
Well, it's interesting. It's something that you hit on, and I know we talk a lot about on the podcast is the focus over the long term. But a really helpful blog post by Ben Carlson over at A Wealth of Common Sense. He's got this chart that he reviews a lot during his presentations that I thought was helpful, is saying we know these things over the long term, right? That risk and return are related, that you get higher expected returns for the risk that you take. We know that volatility becomes more consistent as we have more years of data. Markets are relatively efficient. We believe that very strongly here. And it's really about outcomes. It's not about returns. And these are long-term truths that are core to having a positive investment experience. Yet, as humans, we live our lives in the day-to-days. And Daniel Kahneman, the famous Nobel Prize laureate, said that really the long term is not where life is lived. And so I feel like there's this cognitive dissonance at times that, okay, you guys are telling me to be long-term investors, but what if Joe Biden actually is our president and taxes do show up? Like, Justin, what are the tactical things as professionals that we're focused on living in the here and the now of how we're reacting to this information on a day-to-day basis?
Yeah, well, we control what we can control. I think is the simplest way of framing it, right? Where we're not going to react to the short-term items, unless there's a very compelling reason to do so, and there usually isn't. We're not going to let our our monkey brains get the best of us, right? Warren Buffett has generated all of his wealth by being a long-term investor, not selling based on certain tax regimes with certain presidents. And what we do in actual implementation is, and going back to the controlling things we can control, is within our portfolio management, we are actively looking for the opportunities to tax loss harvest. And that's not something we just do at the end of the year, which is something you might hear from your average Joe broker right now, right? Where, hey, it's the end of the year, let's sell a position that's down. Well, no, we have actual technology in place that allows us to do that throughout the year. Earlier this year was the time to do it when there was the COVID crash in March, right? We took advantage of that and harvested some losses and booked those for your tax benefit. Other things we do is have some efficient asset location optimization. So we hold tax efficient assets in taxable accounts and tax inefficient assets in tax deferred accounts. And we've talked ad nauseum about municipals and the benefits that munis have within a portfolio. So again, it's controlling the things you can control and letting compounded or returns compound over the long term, over generations.
I think that's a great summary, because if you're focused on that short term, man, it's a pretty painstakingly process, right? If you're trying to figure out what the crystal ball is going to say over the next 1-3 months. It takes me back to the conversations 2 weeks ago. Should we sell out? We don't know what's going to happen. What if Joe Biden is elected, or even what if Trump is elected? Like, what's the impact going to be? And we kept having the conversation. Hey, think back to the 2016 election and what happened. How could you predict what was going to happen when Trump did take office? And we've seen over the last couple of weeks, right, that things didn't exactly turn out the way that everybody was predicting they were going to turn out. So focusing on those controllables seemed to really, should give you a lot of confidence in your investment experience and then your overall plan. I know we've hit on that quite a bit, Erik.
Well, let's not forget, we don't even know the definitive outcome of the Senate right now, right? So it's like, Brandon, great point. People expected one thing, the other thing happened, or not the exact thing happened, and we still don't know to this day. We're not going to know until January.
True.
And I think it's just really hard to point out too, is how hard it is to know which individual company is going to be impacted. And Brandon brought up on the last podcast, right, that in a lot of states here, specifically in Arizona, we passed Prop 207, the legalization of marijuana, and yet the pot stocks got crushed. And then now all of a sudden there's a vaccination potentially announced that could be ready by Q3 2021. And all of a sudden Zoom is getting just hammered. Peloton's getting crushed. And it's sitting there going, in a moment's notice of a piece of information, of potential news, markets and individual companies are being reacted to quickly. And so as an individual investor, it sounds really good that, hey, I want to put some money into a specific company, but it's not just one side of the trade. I think that's what we always forget about as investors. It's not only when am I going to purchase it? Is this at the right price? Is this the right time to get in? But when should I sell? And so I think it becomes a very dangerous time to try and front run specific companies of what you think your crystal ball is going to say, what the world's going to look like 3 months from now, 6 months from now, a year from now.
Yeah, I think that's a great point. I mean, I'll say it, if you have the arrogance, right, to think that you have better information than somebody else out there, I mean, God bless you. I mean, hopefully you do have that crystal ball, but if you were sitting on, I guess if you were sitting on the information about the Pfizer vaccine previous, you'd be, in handcuffs probably today. But look how quickly those prices, it just corrected, right? And to think that you have the ability to hear that and make that trade, I think is just a very dangerous game to play. And that's, we go back to the private markets, right? Like public markets, we know it's efficient. Prices are set by the information available. If you want to go, play that game and try to have those higher expected returns, then go look for them in the private markets. And we also know that's a danger, right? We're seeing that kind of unfold on a daily basis here, you know, shoot, the day-to-day TikTok, what's going to happen. I mean, you know, 1 minute, you know, President Trump is outlawing them. The next minute they're back in play and going to be around. So you got to be careful with all that. But I think that's something to keep in mind as well.
Yeah. And just adding to that real quickly, the idea of arrogance to be able to pick stocks, you have to also filter that through whether it's luck versus skill. 9 times out of 10, it's probably just luck, you know, masquerading as skill, and people convince themselves of that, unfortunately, over time.
Yeah, and one quick thing is the luck and skill, right, is evaluating whether it's a good return or not. I love that argument. Like, oh, I picked this stock and it got me a 12% return. Well, is that good? What did the market do? You know, like you also took on a significant amount more risk, you know, single company risk. So, yeah, it's always a flawed argument and a funny argument when I hear it.
And it goes back to what's the benchmark? What's the return relative to the benchmark for the amount of risk? And then here's the key one, after-tax returns, right? There has been an insane amount of coverage over how hot real estate is right now. It seems like the one asset class that forgot COVID even happened, especially residential real estate. And we have had more conversations come in from clients and prospects about rental real estate, rental income. And so that's something we'll cover in the future, but it's going back to after-tax returns. And while you also can't compare your returns to your neighbors or to your teammates, because everybody's priorities are different, most people are in different tax brackets depending on what states they live in, how much money they make, right? And so really it's sitting down with your certified financial planner, it's sitting down with your CFA, it's sitting down with your CPA and making sure that you have clarity around your plan. What are the outcomes we're trying to optimize for? And how do we make sure we have the highest after-tax return for the given level of risk that we're willing to accept and that's necessary to meet our outcomes? And so we encourage you guys to continue to tune in to our weekly show. We want to hear from you guys. If you have questions that we're not answering, please make sure you're shooting them our way. Of course, you can head over to awminsights.com, drop your email in the subscription box, leave us a note as well. And until next time, stay humble, stay hungry, and always be a pro. The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.